There are people out there in little startups, in their garages, in their kitchens, in their labs, trying to solve this power consumption problem. And if we, as a sector, help them, they can probably solve it 3 or 5 years earlier. It doesn't take much of our capital. I've heard some ridiculously big numbers this morning, and it frightens me, and I think we're ignoring actually a really good solution. So I'm going to hand over to each person to introduce yourselves, and then we'll go straight into actually what's out there, what's going on, and how we can solve this. So, Abel.
Hi. Hi everyone, pleasure to be here. My name is Abel Archundia, and I'm representing the London Borough of Ealing and also the wider West London region as a lead officer for data centers. The reason that I'm here today is not just to be a catalyst for your investment in London and in the UK, but also because I fundamentally believe that data centers offer opportunities for both the digital economy as well as local residents and communities. So thank you for having me today.
Kevin.
Good morning, everybody. My name is Kevin Crane. I'm Managing Director of an advisory company called TechLoft Advisory. I'm the former CTO of Intel Ignite, which was Intel's Deep Tech Accelerator program based here in London. I've worked in deep tech for 30 years, and I spent my life with university spin-outs, researchers, and deep technology companies trying to smash down these challenges.
Hi, everybody. I'm Matt Evans. I'm the CEO and co-founder of a startup in space data called EarthSavvy. But I spent the last 20 years of my life building and scaling digital businesses. I'm a physicist by background, a big consumer of data from high-performance compute 2 decades ago to big data, and now, of course, in AI. I built and connected the aviation industry back at Airbus, and recently I built out probably the second largest GPU and compute cluster in the financial services industry.
Good morning, my name is Simon Chusha. I'm the founder of Tech Fusions. We are probably one of the newest data center companies out there, and for a lot of people that just left the room, we're now the largest. We have, I got 16 gigawatts of power and they just left, so good for them.
And I'm Karen Back. I've been in the data center industry 21 years. So Manjara this morning said the data center industry is about 10 years old. It isn't really, I was there before. And today what I do is I chair tech scale-ups, they're agnostic across tech, so AI, media, climate, all sorts of different techs. I'm also a mentor, so Kevin and Matt and I are mentors of something called Creative Destruction Lab, which works with a lot of PhD students who have these amazing ideas and actually can help solve our problems. So I'm going to give one example and then I'm going to ask, and actually this panel is chosen because we are representative of, if I just go back to basics, we as a data center industry saying, okay, you've got some nice servers, I'm going to build a room and I don't have enough power to do that. But actually what we see is the right at the beginning, in the chip design, in the chip manufacture or fabrication, in the board manufacture, then into the server. And that's where the startups are solving problems. I'm going to give you one example and I'm going to pass over to these guys. I know a company, they have proved on FPGA at this moment that they can call on memory faster, because one of the problems in compute is that the processors actually sits idle, waiting for the memory to respond. They have proved they can get 300 times faster compute speeds on FPGA. By the end of the year, they're aiming to have done it on silicon 1,000 times faster. They're one startup with many, many, many. And they're not paying themselves. So why? Because people in this room have $1 million bonuses. These guys are trying to solve our problem now, not paying themselves. That's why we're here. So, Kevin, Matt, give me some more examples. Tell me what you're saying, and ultimately, when you listen to all the people that have spoken this morning, are we overbuilding? Because these solutions are coming at some point.
Well, I think looking at it from the demand side, I think there is an important discussion to be had because we saw a lot of logos on the last slide, but really subtly over the last 12 months, most venture capital investment has been shifting from, I'll say, the producer side of AI, those companies like Anthropic and Mistral that were in the business of building foundation models, building large language models. We're seeing the investment and a lot of the interest now shift to companies that are fundamentally consumers of those models. And if you think about what that means from a compute perspective or data center consumption perspective, we've gone from having a world that was dominated by companies like OpenAI that were fundamentally about building a competitive moat around their access to compute, their access to gigawatts of data center space, and their ability to build bigger and bigger and bigger models. Increasingly, the consumer applications, the business applications, the investment is going to companies that are consumers of those models, who have an incentive not to build more and more, but to try to cut their own costs. The frontier now is not in the giant models. It is perhaps in fine-tuning them, but increasingly in making them smaller, making them more tailored, and making them more and more capable of running on edge devices. The demand is absolutely growing, but it's not clear yet whether it's going to be growing in traditional data centers or whether it's going to be growing in other kinds of devices and networks. And I think if you're building infrastructure, whether it's data centers, towers, or fiber, you have to be paying attention to where that demand is coming from and who's driving it and what incentives they have, not just in the big headline numbers and projects like Stargate.
Yeah, I agree. And just to, I guess, expand and build on what Matt's saying, you know, as an industry, we get pulled by the giants that are having the visible impact and are spending the colossal sums of money on infrastructure and research and development. And you know, and their return on that is market share and harvesting cash. So we're seeing, I won't name names, right? But you know where the money flow is going in compute infrastructure right now, and it's mostly to one person. And that's very, very dangerous. It's also not in their interest then to reduce their pricing, so there's an economic or unit economic impact of that on the rest of the industry. But beyond that, you know, there's an enormous ecosystem of people that are trying to solve the current approach, which is being addressed by brute force, with advanced science. And so, you know, in my world, I'm working with companies who are building next generation AI accelerators that operate at a fraction of the power that we're talking about today. You know, I was at OCP in Dublin last week. They're talking about 1 megawatt rack specifications. I mean, that just screams we're building it wrong, right? If you need to build a rack that supports a megawatt of power, then something's wrong with your technology. And there are people out there that are going to address that. And it's all the way through the stack, from power delivery and materials through to processing and memory architectures, all the way through to cold storage. So there's so much going on out there that these people don't get the airtime and the visibility that they rightly deserve. And their primary end deployment point is with you guys in data centers. So I guess what I'm looking for, and the reason I agreed to come on the panel is, you know, how can the data center industry embrace these startups and use it as a way to forge competitive advantage, and at the same time give them a stronger negotiating position in terms of what they're offering to market and how they're engaging the Goliaths in the industry.
Great, thank you. Simon, you consider yourself as a startup. Well, you're not the kind of startup sitting in your lab upstairs as a PhD student, but how do you see the startup and the embracing of that in the data center industry?
Well, this industry has lost its way, kind of like our society. I built my first data center for AOL in 1994. Everybody who just left the room were building the same dumb thing that we built 20 years ago. The AI is just the next evolution of cloud. It's the next evolution of Bitcoin mining. And he just said something that's brilliant. No one's questioning Jensen on NVIDIA. You know, NVIDIA has a 30% failure rate on their GPUs. You know, the reason I know that is I got 50,000 of them in we worked with a single instance in the data center I built in 13 months. The whole industry is just kind of, everybody's making so much damn money that they don't care. And you know, you saw the charts of the trillions of dollars that's being deployed. Yes, it's all absolutely true. It's just being deployed in a very ineffective way. You know, Tech Fusion, I'm a brand new startup. I don't have an equity partner. I don't have a banking partner. I funded the whole damn thing ourselves. You know, through construction loans. We built 50 megawatts in 13 months. Microsoft came to me and said, I need you to do an impossible for us. And I went, what do you want? I built it. So we have 96% of core use in our Clarksville data center right now. It's up and running. We're supporting the Department of Defense. And then I ran around the world and I locked up 16 gigawatts of energy. You know, we have 800 megawatts in Italy. We have 1.2 gigawatts in Norway. We got 12 gigawatts in Pennsylvania. We have the new, AMD, new direct liquid to chip. We just built 14 megawatts for them in 3 weeks, and that's DLC, which I hate, but because his earlier point, a 500 kilowatt cabinet is just stupid. Are we building it? Yeah, I'm building it because that's what the customer wants, but I won't SLA it. I won't give, it's a 15-year term. I provide space, power, and cooling to the room. Trying to drive that much fluid into a rack is, foolhardy on when you do tech refreshes and you're moving that much water in a live environment with, 15 gigawatts or megawatts of power in a small confined space. It's going to be eventually a problem. But nobody wants to talk about that. Everybody wants to spend the money and talk about, but I'll build it for them, but they have to take that risk.
Yeah, okay. So I think there's a thing here that we're overspending, we're overbuilding. And in Athens, there were some of us in Athens about 6 weeks ago with a tech capital event. Chatting in the evening, someone said to me, data center industry isn't as innovative as they think. It's people in their 50s making decisions that they've made 20 years ago. And it's something you just related to. So Abel, I'm going to be an ageist. Abel is 24. He's working for a council. When you put your application in for a data center, Abel has a very different perspective than me, 55-year-old who's not as innovative as I like to think of. So Abel, what's your perspective?
So I think one of the really interesting things from today's conversations is the fact that, one economy like the UK, we have one of the, we're one of the most saturated markets when it comes to data center growth and development. And yet it still seems like a drop in the bucket compared to the numbers that we're seeing coming through today. What's been really interesting for us in the government to learn is this growth, as important as a digital economy is in all of these things, we need to find a way to balance how we can meet the demands of the future while also supporting other parts of the wider ecosystem in the economy in order to enable that growth to continue. So we talked about the skill shortage, we talked about pinch points to get to grid supply points. I think one of the really interesting things that we also need to look at is how can we make sure that the industry innovates both within the box, as has been discussed, but also outside of the box. Now, large-scale developments that are coming forward in urban areas, especially cities like London, we are a service-led economy. We do have the end users here, and we see that that's being reflected in all of yourselves willing to invest premium prices to bring energy here and capital, and land values. But can we make sure that these developments are also geared for the future of the local communities so that the innovation comes out of the box and also creates a more open ecosystem for the startup businesses that might be taking up affordable workspaces or incubator spaces that we're seeing coming through the applications. The UK government is waking up to the opportunity of AI, to the opportunity that data centers are driving. In 2024, we classified data centers as critical national infrastructure, which is a very important first step to start to bring regulation a little bit more standardized and streamlined planning processes. And the other really key advent in the recent months is the AI Opportunities Action Plan and AI growth zones that are coming thereof. I think it's really important that the government is trying to unblock development where it's challenged, but equally we need to find ways to manage growth and manage development in areas like London where there's a lot of investment coming in. And a lot of that has to do with finding ways to be more efficient with the technologies that are coming up in the startup ecosystem. And that will help a lot to bring energy demands down in the future.
Yeah, but there's really a bad value proposition, I would think. In a previous role, we had 24 megawatts in Northern Virginia, and I ran all of that, all the compute inside with 6 people. And that 24 megawatts was more power than Airbus consumed across all of its production plants in Toulouse, France, that employed 20,000 people. So really, if you're looking to spend grid capacity, if you're looking for connectivity, I imagine it's a tough sell to build a data center that employs a dozen people.
Yeah, absolutely. And I think one of the other key problems that we're seeing, and this is especially visible when you're coming from the local government perspective, you start to see all of these sites popping up across the city, across the wider regions in isolation. And although there is top-down governance that is giving us some guidance, it's very telling to say that almost no local plans have mentions of data centers. The London plan, which is one of the most important policy documents, that informs your approvals for your sites is very silent, in our opinion, on data centers. And like I said, government is focused on unblocking but not managing with this growth. So absolutely, we need to find a way to bring the public sector and the private sector in closer conversation. You know, we're not a monolithic organization, and I know that most of us turn to governments when we're looking for innovation and risk-taking. Obviously, that's not the case. So we have to work with a wider sector. We have to work with a startup ecosystem.
And I'm just going to pick up that very point because we hear these amazing numbers. So again, in Athens, someone said, oh, it's just another 200 billion per data center spent to get the liquid cooling in. Or we hear we've got 800 gigawatt deficiency. I mean, these numbers are huge. Or this morning, I think it was Joe Moran, maybe, who said if we're 6 months late, it's a $40 million penalty. And I'm going, oh my God, imagine you just give 100 million. All of us in this room, maybe there's 10 of you, you put a 10 million check in somewhere. We have a 100 million fund, we take 100 startups because nobody knows which startups are actually going to get their tech out there, and we give them $1 million each. That's my naive optimism view, but actually, within those 100 startups, we can bring forward the solutions, and you as investors, you as people, actually have less capital at risk, and you get better returns. We've heard, and my view is we're in a bubble, but we've heard so much, actually, our GPs and our LPs are asking different questions now. So I'm just going to go back to, I'm going to pick on you, Kevin. So Kevin and I worked together at Intel Ignite. He looked at 250 startups 2 years ago. Tell us about some of them.
Yeah, I'm quite privileged to be very directly connected to particularly the UK, but the European university spin-out ecosystem and the kind of seed and A-round funded deep tech technology sector. And there was a common trend across everything, that it doesn't matter whether you are building networking, storage, or compute or memory, their driving value proposition was about reducing energy consumption. It wasn't by design, that was just that was their USP. Everyone is trying to apply, you know, current best-of-breed research and science to providing a better product that exists today at a much more power-efficient level. And that wasn't led by anybody, that's just their starting point. So they're coming out with these inventions in response to the climate change issue we have, the power capacity issues that we have in countries, and all those things we see in the media. In the UK in particular, you know, has a very significant computer science heritage. I mean, most of the things that we see in the computer world today, if you go back far enough, a lot of them originated here in the UK. Some of us are old enough to have been around through some of those bubbles. And that hasn't stopped. So there's amazing startups in the UK. There's a company called Lumai who I'm involved with. They're an Oxford University spin-out, so they're building a fully optical AI accelerator. So think of what NVIDIA are doing with their GPUs, or AMD, or Intel doing with their accelerators, but keeping that fully in a photonic domain rather than an electronic domain. So huge energy improvement claims, so like 200-300x improvement for the same performance levels. The same thing in infrastructure. So on network infrastructure, there's another UK company that I work with called Finchetto, who are building a passive switch. So fiber switch, but with no electronic control plane. So all of a sudden you can ditch that 2 kilowatt Cisco 48 port switch you've got in every rack and have a patch panel effectively. And all the switching is being done by light to light. Right? Absolutely phenomenal, game-changing stuff. You don't need megawatt racks when you're deploying these types of technologies. There's alternatives to direct-to-chip liquid cooling coming. There's people that are using gas rather than liquid down at that level. It's progress in material sciences for semiconductors. We're getting away from silicon and moving to glass substrate. That changes the whole framework for these things. We have amazing companies like Fractile in the UK who are doing AI acceleration in memory. So there's a technology called in-memory computing that requires infinitely less energy to do the same calculation. And I think the guidance I give to everybody when we talk about AI is to just unpeel that always one level. So when you're talking about AI, are we talking about training LLMs and training models and making OpenAI type level of infrastructure requirements or having those types of requirements? Or are we just talking about the user space, which is more in the high growth, as Matt touched on, which is increasingly, which is inference, and that's increasingly becoming distributed and moving out of the data center closer to the edge. And that's what we're doing on our phones today. AI on my phone is inference on my phone. So that trend isn't going to change. And our last speaker was talking about software-defined networks, having compute at the towers. This stuff is all very, very alive and real, and is contra to the current kind of build-out strategy that's happening. So the challenge is, how do these technologies get manifested? And that's always the biggest problem. So when I work with the founders, they're like, oh, I'm building this switch and I'm going to sell it to a hyperscaler. And you're like, you're just not, guys. You're 7 people in a room and you've got an amazing thing, but Microsoft or AWS are not going to talk to you. Right? And so there's a gap, because also those hyperscalers have their own R&D teams and they're trying to solve their own problems. They want their own supply chain control in the same way that Apple want their supply control. And if you let these companies accumulate the wealth, then they will have the ability to do that, and they will dominate and dictate that industry, much as Apple are for the cell phone industry. So that's going to start to happen. So if we let the money all go to 1 or 2 people, they will decide what innovation is successful. Surprise, surprise, it will be the ones that they've either developed or have invested in themselves. And that leaves a lot of amazing technology which is going to get benched because it's not going to get an opportunity to see the light of day. So I ask all of you if there's any opportunity to get these startups in data centers, because they need to learn. These are PhDs from Cambridge. They don't know what your requirements are to deploy this stuff. It's a different language. They have absolutely no idea. But they start in the wrong place because they're targeting AWS and GCP and so on. So how can we expose the bigger industry to their technology? You get an opportunity to learn and differentiate, and at the same time we give these guys a better chance, because they're able to raise money if they can say, oh, we're in 7 data centers and we have an active network and we have users. Right now they're struggling to reach that threshold, therefore they don't get the investment, and then they wither on the vine and die, which is to all of our detriment.
So as you're listening to this, are there people sitting there going, yeah, this makes complete sense and we need to do something about it? Or are you just going, not my problem, I'm at the end, I'm making lots of money, thank you? I think we might build an answer. Yeah, maybe.
It's very altruistic, your approach. The reality is that everybody wants a return on capital. And if you're developing a product and you don't have a clear path on how you're going to return the capital to the investor, you're just waiting. For us, I look at it, as soon as I deploy capital, I need to start returning capital to my investor within 6 months. Full stop, period, end of discussion. No one thinks about it this way. And the reason is you've had very poor managed companies do very, very well. You look at Uber, and you look at all these huge companies that didn't make a profit for years. So you have all these inventors and all these people bringing products to market that don't feel like they want to be true to their science and they want to build these things. So what they need to be true to is the balance sheet. If you're true to the balance sheet, you give your investors their money back, and you give them a means to return the money back to their LPs and back to the grandmas and the pensioners that are using that funds. When you do that, it becomes a very different conversation. Those types of incubators and things like that, we need to take these small companies, we need to mentor these young investors or inventors and say, make your product that an investor wants to put money into. For me, I need investors, but I don't have them. So what I do is I build and I keep going and I'm going and I'm going, but based upon a balance sheet. The technology will adapt itself to what brings back the capital. Jensen is being very, NVIDIA is being very, very profitable right now because they don't have anybody else on the other side. I will tell you that TSMC, AMD, all the other ones are going to be all announcing products this year, and it's going to be a very different. But to your point, you're right that optical switching and all these things that were consuming huge amounts of power, that will, the 1 megawatt rack is going to go away. It's unsustainable. The 500 kilowatt rack is going to go away. It's unsustainable. Are we going to play this fallacy for the next 36 months? Probably. But to someone's earlier point, they said flexibility. Flexibility is the key. But power, bringing power on responsibly into communities. You know, in the U.S., we're about to have a tectonic shift. And everybody left the room's not paying attention. So in the U.S., we have a thing called FERC, Federal Energy Regulation Commission. And they control the ISOs. The wholesale power rate in the U.S. right now, in PJM, is 2.9 cents a kilowatt hour. Very, very inexpensive. July of 2026, it's going to 26.9 cents wholesale. It's a 10x increase. Every data center in Northern Virginia is about to get whacked. There's nothing they can do about it. And the reason there's nothing they can do about it is because they haven't contributed to paying the cost of building the transmission lines that Mark Anthony was talking about. You know, all of these types of things take huge amounts of capital. Like with us, I don't even try to interconnect to the grid anymore. You know, I look at where the stabilized power is. Stabilized power globally right now is natural gas. That natural gas grid is 99.99999% efficient. You know, you can build natural gas clean turbine energy, and that can be your transition until we figure out SNRs, until we figure out other types of, you know, but data centers and communities need power. You know, we look at it as, you know, we can build power plants, we can put power back into the grid, but even in the U.S., it's a 10-year process to get an interconnect into the U.S. grid right now. No investor is going to have capital stay on the sideline for 10 years. For us, we say you come into us, you're going to start getting return on your capital in 6 to 12 months. But those are the types of things that have to happen globally. And there's infrastructure, and there's all these very talented people out there that just don't understand that they have a financial responsibility to the industry, because if they build a better mousetrap, people will fund it. It just has to be a way for investors to have comfort in what they're doing.
So how do we build them that better? How do we help them build them better? I can't say that, better mousetrap.
We educate them. We educate them in finance. Like this is a finance conference. Nobody really understands what, you know, there's bankers that understand what it means, but the inventors, they never talk. They're not even taught in university. You go and get a PhD in, you know, computer science. Not one of them is having to take a course in, you know, macro international economics. They don't understand that the people that are funding their tech, they talk two completely different languages.
I agree with that. I think that's a story. You may say something.
No, it's just, I think, I mean, the challenge is we really have there's a big unmet need in this space. Because I'm familiar with some of the companies that Kevin was talking about. I'm sure that I've tested technology from some of those 250. But I will tell you that I've not bought a single thing from anyone. And the reason is that anybody with a serious compute workload, whether you're OpenAI or Amazon or a small startup, that compute workload is like a factory. You depend on networking, you depend on storage, you depend on GPUs, you depend on CPUs, and having a technology that makes one aspect of that take less power or run faster or, you know, somehow fit with the form factor of my rack better, it doesn't do me any good. If you're running a factory, you don't buy one machine that sits in the middle of it that runs faster. Because all that's going to happen is the bottleneck is going to move from that one machine to whatever the next problem is. So if you're out there, if you're one of these 250 entrepreneurs, these brilliant scientists, they're not going to make any sales. They're not going to return any capital until they can show that their system actually makes a difference in a rack, in a hall, in a real-world network. You can replace one element of it, test it, and show that the overall benefit is there. But it doesn't do you any good to have a single set test and say, well, inference runs 200 times faster. Well, great, but my network doesn't run 200 times faster. I didn't suddenly get a 200x increase in my storage speed. If you only fix one part of the problem, you're no better than a factory manager that makes one station look faster. It does nothing. And so I think fixing that, the challenge is how do we get that impetus to have the test environments that these people need? Where does that come from? Once it's there, there's a path. There's a path for the inventors to get funding for their products. There's a path for people who are building data centers and building fibers to understand where the demand is going to be, maybe in 3 years or 5 years, and what the shape of that demand in terms of power and space is going to look like. But yeah, for now, that's a missing piece.
So Equinix in the past has, clients have walked into Equinix and said, I'd like to test this new thing, whatever that thing is. And Equinix has said, okay. But they'll only do that with certain clients and they won't be doing it every day of the week. So it is a test environment. It's a live data center with real racks, with real vibrations, with real everything else. That helps them prove. Like, these scientists don't get access to that kind of environment. Is that what you're saying? Is it is one of the solutions? A possible solution?
Yeah, I think that would, it's got to be a real world environment. And there's very few of those. It used to be, again, going back to my graduate school days, that was the role of, at least in the US, of national labs. You know, big data centers in places like Sandia and Oak Ridge, and you could get grant funding, you could get investment to put your equipment in there and measure it. I don't see that really existing anymore. I know I see a lot of pitches like Kevin mentioned where one component is going to use less power or go a lot faster, but I don't see anybody with that opportunity to actually test it.
And yeah, perfect.
Yeah, no, I think what's coming up quite strongly from this conversation is that irrespective of the real value that these technologies can bring to the data center industry, both within the chips but also in the operations of the facilities, there's a bridge that's missing connecting the startup technologies with the potential investors and the data center sector. One of the things that government can actually really impact in this space is convening powers, bringing the great research institutions, some of which were already mentioned by the panel, both in Oxford, Cambridge, lots of institutions in London, several across the country that are working in the space, but also trying to understand what can we do to unlock something like the idea that you just alluded, is something like a data center lab, a policy that the government should be championing in order to allow these startup technologies to be able to test, implement their solutions and prove to the industry that they can actually deliver a result. Some ideas like this are the kind of conversations that we're very interested in having with all of you, and it's great to have the panel representing some of them today. Without strong public-private conversations, through sector forums, through things like this, we can only go so far. We're not a monolithic organization. So, I mean, aside from something like this, is there any other initiatives that you see could help bring the startup ecosystem to the fore and enable them to integrate and scale?
I would love to see data center owners or operators be proactive in encouraging innovation to happen in their facility. Whether that's through a structured program, whether it's through partnering with others, whether it's through partnering with universities or other accelerator programs, or investors even. I think that would give these inventors an opportunity to prove out their technology at scale, which is what unlocks a lot of stuff. I mean, at the end of the day, in the AI space, the unit economics are going to be around selling tokens. It's going to be about energy cost. It's going to be about the amount of compute you can operate in a particular facility, and it will come down to metrics. So if these guys can reduce your networking burden, reduce your cooling burden in the facility, reduce the need to have to invest in liquid cooling for everything, that ultimately is going to have a direct impact on the profitability of the token that you're selling.
Okay,
We need your help again.
I'll do it.
There you go.
Excellent.
I got a 12 gigawatt site, no special later, come on. You guys, we have 2 million square feet. I have 27 megawatts of straight up power right now. Come on.
There you go. You got a witness.
There you go.
We've got 2 minutes. Any questions in those 2 minutes?
Thank you. I just had a question for Adrian. We talked a lot about how can we bring these innovations to the fore. In my view, government has a key role to play here, not only as a convener, but also in creating the right incentives for this innovation to come into the sector. And I was wondering whether are you planning to take any of those actions either at local or even international level. So I'm thinking, if you are in the process, for example, to investigate carbon application, are there any requirements around innovation design by sustainable design, etc.? That's one idea, but there could be the other idea.
Yeah, it's a really good question. I think I'm going to answer that question by talking about the national approach at the moment, and then looking at what's happening on the ground at the local authority level. So on a national approach, the government is, it might be rightly, but also, constrained by capacity, looking at delivering sites where there's major reasons why it cannot be delivered, whether that's some kind of network connection or some kind of infrastructure piece that can unlock 500 megawatt plus sites. And in those data center campuses, very ambitious plans. I think that innovation is probably going to be one of the key cornerstones of that policy approach. And it certainly features in the AI Action Plan and in the AI Growth Zone Initiative. But if we step back from the national perspective and look at what's actually happening on a local government view, I alluded to this earlier in the conversation. The people that are working on the planning front are not data center experts. Right? They're very, very good at assessing applications for built environment asset classes. We're very good at residential. We're very good at understanding industrial warehousing schemes. But data centers coming forward in urban areas are a relatively new development, especially at the scale that we're seeing here. So one of the problems is an education piece, making sure that the policymakers and the planners that are assessing these schemes understand what is actually being developed. It's not just a big box that's coming in our cities, but it's a massive opportunity to catalyze innovation. So I would like to see there's being a set of non-negotiables, some kind of principles that will help establish certainty both for yourselves in the sector, but also for the public sector. What do we require from these kind of schemes? I said at the moment, policy is fairly silent on anything certain, but we're moving in a direction where we're trying to understand what can we do to maximize the impact of development. And a really important piece of that is everything that has been discussed today, maximizing innovation within the box as well.
Just be careful you don't do what I did.
I hope there are no Irish in the room. I think at that point we are finished. But huge thanks. I think you've got the message. There are people trying to solve our problem faster that will get you better returns, take away your risk, and we're kind of ignoring them, so we want your help to get this working. Thank you.